Hello, welcome to the first video in NFF's series, Understanding NFF's Lending Process. In this video, we'll share what kind of information might be exchanged in an initial conversation with the NFF lending team. So first, here's a broad overview of the steps in NFF lending process. We're going to assume that you have already identified NFF as a potential lender. So then in that case, you would need to fill out our loan intake form, which is available on our website or through a link in the video description. And then after you fill out that form, if your needs fit the kinds of loans that we offer and your organization meets our minimum requirements to be considered for a loan, then a member of NFF's loan origination team will reach out to you to set up an initial conversation. So that's where we are today. That's what we're going to talk about in this video. You are working together, the lender, NFF as the lender, and you as the borrower over several months to close the loan for all of the rest of these steps, and then for however long the term of your loan is post-closing. Since this has the potential to be a long relationship, both you and NFF will need to make sure that the loan and the relationship are a good fit. And this initial conversation is the first step in making that determination together. More specifically, you, as the borrower, will want to know about pricing and structure of the loan so you can decide if this is right for your organization. You are trying to answer a bunch of questions. You want to know, how do NFF's costs compare to others that you might be exploring? What are the payment terms? Those are things like the interest rate and relevant loan fees, as well as the size and the frequency of payments and the term length. You want to know, can your organization afford the loan based on those terms? Also, what type of collateral and guarantees and reserves are required? Does NFF understand your situation, and are they willing to work with parameters that you have, like specific timelines or amounts? And then you also want to know, like, what happens if you run into challenges or fall behind on payments? Will NFF work with you? And then on the other side, NFF needs to understand what your financial need is for the loan that you're seeking and whether one of our loan products can fit that need. If we think that it might, then we will need to gather additional information from you to be able to move to the next stage of the process. At NFF, what this means is that we send you a due diligence checklist that lists what additional information we need. You send us that info, and then we do our initial analysis to decide how to move forward. It's important to know that NFF having a loan product that fits your needs is not the same as approval. NFF still needs to complete its underwriting process where we assess your organization's ability to take on new debt and to manage repayment of the loan. And part of what we're trying to determine in this initial conversation is, what are the potential obstacles we might face during underwriting, and do we have ways to work through those challenges? One thing we don't want to do is start this process, which can be time intensive for everyone, if there isn't a viable path to get across that finish line to approval. It's not a good use of anyone's time. Speaking of time, the timeline for these initial conversations largely depends on how long it takes to get all the due diligence documents together. This can be a big ask and a lot of work, so we recommend watching our What Lenders Look For video to make sure that you're prepared. You can find the link for that in the video script and at the end of the video. Okay, now let's see what this might look like in practice. I'm going to introduce you to two folks who we will bring on the line. I want you to meet Sal, the Director of Finance for ABC Organization, a workforce development nonprofit. ABC was approved for a new large government contract this year. Since the contract is reimbursement based, ABC has to pay for all of its expenses up front before they can get reimbursed. Sal worked with his executive director and board to determine that they need a loan to help them manage expenses for this contract. Sal's already reached out to his local bank, where ABC has an established relationship, but was told that ABC doesn't qualify for a loan through them, so now he's exploring a couple of other lenders, including NFF. And meet Brittany, a loan originator here at NFF. She's part of the team that helps organizations figure out whether our loan products might support their work. So Brittany has reviewed ABC's intake form and has a good sense of their mission and financial picture, and now they're on this call together. And the goal of this conversation is for them both to make an initial assessment about whether this is a good fit. Sal's trying to figure out how the cost of the loan through NFF compares to others, and if ABC can afford one through NFF. Brittany is trying to understand how NFF can support ABC with a loan, including what type of loan might be a fit if they're a good candidate. So Sal and Brittany have already been chatting for about 10 minutes. And before we drop you into the middle of their conversation, here are a few important things to know. This is not a call to get approval or even pre-approval. It's simply a chance to understand ABC's goals, impact, and financing needs, and to see whether NFF loan might be a fit. This is a two-way relationship building conversation, right? Both Sal and Brittany are starting to figure out whether a long-term partnership feels right, because for NFF, loans aren't just transactions. They are ongoing relationships. And for you as the borrower, that's true as well. And then the second important thing to know is this is the safest place to ask every question, big or small. No one is expected to come into these conversations knowing all of the lending jargon and all of the parts of the process. So we encourage you to ask questions. Okay, so Sal and Brittany have introduced themselves. They've shared some background, and now Brittany has asked Sal what his questions are. So we are going to join them mid-conversation.
Sal, thanks for walking me through ABC's mission and communities you serve. Hearing the real impact behind your work, not just the numbers, helps me understand what's at stake and what you're trying to make possible with this financing. That's always where we start at NFF. So, just to set the tone here, this call isn't any kind of a pre-approval or decision point. Think of it as a mutual fit conversation. You're learning about us, we're learning about you, and together we're figuring out whether NFF has a loan that could be supportive of ABC. No pressure either way. And with that, I want to make sure we leave plenty of room for your questions. So tell me, what's at the top of your mind right now?
Great. Thank you, Brittany. I guess I'll start by asking the question that's most top of mind for me, which is if you can share more about NFF's current interest rates and the fees that are associated with loans.
I appreciate you getting right to the point. It's important for organizations to understand the full cost of capital upfront. As a nonprofit mission-driven lender, NFF offers the lowest fixed rates we can, given the capital we have available to lend. Interest rates and fees vary depending on the loan type and term. So once I have a clear picture of ABC's needs, I can give you a more tailored number. I can also send you our indicative rates at the end of the call, but please know we won't lock our interest rates until we execute a term sheet, which comes a little later in the lending process. In terms of other costs, NFF charges an origination fee between 1 and 1.25% based on the size of the loan. We also have a modest legal fee to cover the cost of drafting all of our loan documents.
Okay, and this is roughly what I was expecting based on some other conversations that I'm having with other lenders. And I think what we need is a line of credit, but I know NFF has other types of loans too. So just wondering if you think a line of credit here is what ABC needs, or could it be something like a bridge loan?
From what you've shared, that ABC has a government contract where you pay expenses upfront and wait for reimbursements, yes, that usually points to a line of credit. We consider a bridge loan if it were truly a one-time need, upfront need just to kick things off, like hiring new staff or making upfront investments as they ramp up a new program if covered by the contract. But in ABC's case, your contracts require monthly invoicing and tend to impact cash flow needs. In this case, your financial need is likely better suited to a line of credit.
Okay, yeah, thank you for clarifying the difference between a bridge loan and a line of credit. And is there anything that would be helpful for me to know about things like the terms and the structure of a line of credit?
Of course, our lines of credit typically have a 1 year term, but we can discuss including two optional annual renewals. The amount you can borrow is based on 80% of the money you owed, that is owed to you, that is less than 90 days old. We also require a 30-day cleanup period, which means you must bring the loan balance to $0 for 30 consecutive days once every 12 months. The cleanup helps to make sure that the loan is helping smooth timing issues, not becoming permanent operating debt.
Okay, got it. So just so I'm clear, a line of credit doesn't necessarily give us access to that line indefinitely, right?
Right. That is one difference between a line of credit and a credit card. A line of credit is intended to solve for a temporary and short-term timing difference between when you receive revenues and when you have to pay expenses. You can ask to renew a line of credit, but that is a whole new process. This is different from a credit card, which typically stays open as long as you're using it.
Got it. Okay, that's helpful to have that comparison, and thanks for clarifying that.
Of course. I noticed on your intake form that you secured additional reimbursable contracts this year. Understanding how and when your reimbursements come in helps us think through the loan structure and amount. Can you tell me how those contract payments are earned and how long do you expect it will take to receive reimbursement?
Yeah, so this contract is for 3 years, and we can submit our expenses for reimbursement once per month. And the contract says we'll be reimbursed within 30 days, but from our experience, it often takes closer to 60 days. And with our existing contracts, we've been using our cash reserves to cover expenses while we wait for those reimbursements to come in. But with this new contract, we don't expect to have enough cash to cover both the contract expenses while we're waiting for reimbursements.
Got it. That context is really helpful. When do you anticipate needing the line of credit?
We're in our planning phase now, and we want to start within the next 4 months. And we've crunched the numbers and estimate that we would need access to about $1.5 million dollars as a line of credit to be able to ensure that we have enough cash to pay all of our expenses related to this government contract on top of all of our regular operating expenses. Again, while we're waiting for reimbursements to come in.
Thanks for the context. So, the next step would be for me to send you an initial due diligence checklist. This would include things like recent audits, monthly cash flow projections, aging receivables report, governance info, and a few other pieces that help us understand your full financial picture.
Okay, yeah, that's mostly what I was expecting. However, we don't have monthly cash flow projections. We project cash on a quarterly basis. So just wondering if this is a problem, and if it is, if it's something that we can work on now.
Not a problem. However, you definitely need monthly cash flow projections before we can move further into the process. I'm happy to send a template and walk you through it, or I can also point you to a few helpful videos if that makes it easier.
Yeah, if you could send the template and any resources for that monthly cash flow projection, that would be really helpful. And I'll work on this with our executive director and our board's finance committee.
Of course. And before we wrap up, I want to learn a little more about ABC's governance and leadership structure. Things like how your board and management team make financial decisions. That helps us understand how you operate and whether this financing fits into the way you already manage sustainability.
Sal and Brittany obviously talked for a while longer. They both had more questions that they asked. But we're ending the clip there because we think we that shows a good example of asking questions. We hear this phrase all the time. This might be a silly question. And when we hear it, we're always so glad that someone was brave enough to finally ask. We are happy to hear those questions because it is 1,000 times better to ask questions to make sure you understand everything thoroughly early on in the process than if you miss something or misunderstand something important that could disrupt the process later on. And when you don't understand an answer, which also happens often because these are new and complicated topics, you can always ask the question again or paraphrase to make sure you're understanding it the way the lender intends. Really, during these conversations, you want to do whatever you need to get the information you need to make an informed decision. We hope this helped prepare you for your initial lending conversations. If you have more questions or want to learn about the next steps in our process, you can check out the other videos in our series below and also linked in the video description. We also have another series if you want more general information on a beginner's guide to debt for nonprofits. Thanks so much.